Mike, how are you, man?
Doing really, really well. Thank you
Good,
for
good
having me on.
afternoon, New York time, morning, San Francisco.
Yeah, it's always a good day when I get to talk to you.
And it looks like you're in a new office.
This is my office. Um,
Beautiful.
Not much here. I got my sneakers, golf clubs, and my Shepherd Berry. That's about it. And my Doodles pillow, as you can see.
Well, you're really equipped for anything at that point. Sneakers and golf clubs and pillows. You could take a nap. You could go for a run, play golf, and take a nap all in the same day.
Yes. Most importantly, I have my computer. That's really all I need to do my
Yeah.
work.
Well, it's great to see you, and I mean that literally because we've been friends for over a decade now.
Yeah.
It'd be great.
Multiple VC cycles.
Yeah, it'd be great if you could give folks a little bit of your background, and I'll jump in where appropriate.
Yeah, my background is really just one of an entrepreneur. Went to Northwestern University, started my first company in 1994 at Northwestern University, back when there were 13 million people total on the internet, which is kind of a crazy stat. I say we, kind of me and you and a bunch of others who are old like us, went to college without email.
Yeah, that was the HyperCard days. In 1994, it was HyperCard, and we had at Dartmouth, we had Blitzmail. That was considered really innovative because we were a college that had email.
Dartmouth was the first, I think. Northwestern, let's just say, wasn't the first. And so we weren't really given email at all while I was there, but it was optional. So I got one. mlaz@merle.acns.nwu.edu was the email address. And I would have to walk to the library to check it at a computer, and you would wait in line only to be disappointed that you didn't have an email. Fast forward now, we're suing people who email us that we don't want. So kind of the world has changed. But went to Northwestern, was exposed to the internet through the journalism program. I was a student at Medill, which is one of the top journalism programs in the world. And it just hit me hard, the internet, as like something important, especially as you're kind of going through this like media program. What does this do when like everyone has a printing press? And was just, he just dove in and was just speaking to one of my advisors there, who still a very good friend, Mary Didinsky, a legendary Chicago journalist. And she remembers kind of like both of us, but really me, I just couldn't stop talking about this thing, the internet. So did that business, which was a student business, UWire. It was called Student News Service, which then became Student Advantage, which actually became a public company, a pretty large company. And then just that set me on my path. So made a little money there, did golf.com with my wife, Cass, which is the first company with my wife. We've been together since I was 22.
Also Dartmouth alum, I should point out, Cass.
Yeah, also Dartmouth alum and tennis player at Dartmouth.
Yes.
I know there's a lot of tennis around GGV with Glenn and the partners. Yeah, maybe it's just Glenn. I don't know.
Not me. It's not me. He invites me out once a year and I embarrass him. So
yeah, well,
once
I don't
a year I get
either.
the invite.
Cass doesn't even invite me. Shouldn't even bother. But stuck with the worked with her on golf.com, sold that to Time Warner, which brought us to New York City, where I'm sitting today. And had left that as part of Time Warner and the Golf Magazine Group, Sports Illustrated, back when Time Warner was a company, and people cared about Sports Illustrated and some of these publications. You now can't give those away, so the kind of internet has eaten those as well. And I remember when Facebook launched their platform way back when. So F8 was on May 24th, 2007, same date that our third child was born. And I knew immediately that was the business. Started Buddy Media, which we met early in that journey, which was interesting. And actually taught me a lot about the VC world. Like, we built the relationship way before you invested. People don't know this, but you were a great entrepreneur before you became fabulously rich on the VC side.
We have a long way to go.
And that resonated with us, just kind of and your kind of entrepreneurial journey was fraught with, a lot of issues and successes, but you talk more because you're humble, talk more about your failures. It wasn't even your failures, kind of just the struggles.
No,
of the
I was a big failure.
No, the company was, but like you weren't
yeah.
alone at the time. I mean, it was,
I think anyone who lived through that, anybody who lived through that 99, 2000 experience, it was a pretty searing experience on how quickly things can change in the world around you.
Yeah. I mean, I was 23 and went 24, went from having a public company and being, relatively rich, which was kind of crazy, thinking it was all up and to the right, to kind of like, oh my God, I got to get a job or start something else. Which so it was, that lesson was like, oh man, this thing doesn't last forever.
Yeah.
I think we're in kind of a world right now where we think it's going to last forever, but maybe it won't.
Yeah.
Maybe it will, who knows? First for everything. And did Buddy Media, which was really fast. Like the crazy thing is, it was 5 years from the time we launched to the time we sold to Salesforce. And it really was only 3 years that we actually had a product that made sense. We did like 3 products, and then we landed on this social media management system, software, starting with Facebook, but at this point we're on Twitter and YouTube, about to launch Instagram, and Salesforce had launched with, Mark's vision of the social enterprise. And so we were part of the, his acquisitions of social, but really built out the marketing cloud and did that for 4 years, which was awesome. Like great company, great people. I'm still in touch with many, many people, some of, my partners and, key lieutenants at Buddy Media are very senior there now. People, like Patrick Stokes,
which is amazing.
And others. Yeah. And so it was really, it turned out to be a great experience for me, but also for many people who are still there. And others went to start businesses like, Miles went over to Braze, Miles Klieger, and, there's a whole group of people who have gone on, which makes me very happy. And, as you get old, you do what entrepreneurs do, which you jump to the other side, which is investing, where you don't get as cranky, as fat, or as, just generally grumpy as running companies. Running companies is so hard.
It's hard.
It takes all of your life. We had years where we had 3 kids we didn't even remember meeting their teachers. Please don't send this to my kids because they'll use it as evidence against us. But I couldn't imagine putting in that sort of effort today.
Yeah.
Which is why we don't try anymore. And our job is really as investors is just to make things easier for entrepreneurs. So hopefully if we do our job right, we kind of clear obstacles and open up opportunities. And if we do our job wrong, we're a pain in their ass. Hopefully we don't do that a lot or ever, but we have a kinship with a lot of the entrepreneurs who we work with every day.
Yeah. And what, maybe can you share, I always think it's really interesting. I remember that same feeling I started my first company when I was 25, and that pressure that you feel when the world is kind of caving in around you. And I agree, we're kind of in a time like that right now where there's a lot of uncertainty. This Russia attack on Ukraine is something that none of us have really seen in our lifetimes, combined with inflation, rates going up, the market crashing. In those moments, what are you sharing with founders right now? What are you telling them? How are you helping them remain calm? What advice are you giving to folks for, having been through a few of those cycles as a founder, not just as an investor?
Yeah. So, the advice isn't that different, but, when it's not in these crazy times, but it takes these crazy times to like make a lot of entrepreneurs focus on it. And, there's turbulence, not only kind of macro, but in our industries, software companies have been crushed. We have, in the public markets, there's a lot of uncertainty, which hasn't come down into the private markets yet.
It's coming.
So the smartest founders, founders know that.
Yeah.
And they know that kind of, you're not going to see the crazy valuations and just the free flow of capital that we've seen if, we continue to see what we have seen in the public markets. But I tell them just to focus on what you can control. So I am an optimist. I don't ignore the macro events, but at the end of the day, as a founder, you can't control what Putin does.
Right.
As a country, we can't control. Like, I don't think anyone can.
That's become clear.
So, exactly. And so, much of what we worry about day to day is out of our control.
Yeah.
So like, what can you do today to win? What do you need to do? Are you focused on the right things? Are there things that you're doing that you should cut out because it's a waste of time? And what do you need to do to just win today?
Mm-hmm.
And then what do you need to do to win for the week? And then the month and the quarter and the year and then multiple years. And if you just break down like, oh, I really need to hire these people, or hopefully you're not running out of money tomorrow, but like in 6 months, we think we're going to need some capital. So, okay, let's start with that. And it's this constant kind of shuffling of priorities and making sure that everyone in the organization knows about them. If you don't know what's important, typically no one in your organization knows what's important. And so what I learned from Mark Benioff is you got to write it down. You got to prioritize them. It's got to be on one sheet of paper that sits on your desk. If you don't write it down, it probably will never happen. And I like that sort of control. Like, I'm kind of ruthless of like, this is on my plate. This is what I'm going to focus on. And all the emails that are coming in, all the texts, all this stuff is just other people wanting me to do their work. Whereas what do I need to get done to win? And frankly, as an investor, I feel similar pressure. It's just not as existential. Like, we're not going to run out of money. We're fine no matter what happens. Like, the highs aren't as high and the lows aren't as low. I'm kind of addicted to some of like I like chaos. Not like, I'm comfortable in it. Like, I'm comfortable in the hurricane of like uncertainty, of not knowing where things are going. And I think that that's important in a world where like raising capital is kind of, even with the market shocks, as easier as it ever has been.
Yeah, it's easier
it was
than it
not
was 15
easy.
years ago, for sure.
Yeah, it was not easy to raise, like,
I agree with that.
It was not easy to finance ideas. And now kind of like what used to be Series C or like Series A, what used to be like kind of your mezz pre-IPO is like Series C. And, you have a lot of capital, and, it just forces me as a VC to act differently. Like, capital is only one part of what a company needs to be successful. And so, and that's what we hang our hat on, of just like, we're not just investing, we are becoming invested. Like, your win is our win.
Well, and you have a lot of your own personal money at stake, right? I think that's one thing that is really valuable about what you and Cass are doing, right? It's funny. I had a conversation with a founder last week where I said, in times like this, where the market gets super choppy, I get more concerned about the companies that aren't executing well, and I get more bullish on the ones that are. Because when the market gets choppy, you saw this in, we saw this in kind of the 2000 to 2007 window. We saw it right after the GFC. If you have a business that's well capitalized and is executing well, you take share, you crush competitors, you attract talent. It's a great time to be a founder if you're executing well. If you're not, it's a very scary time. And so that's something I've kind of been using as a little bit of a litmus test for founders to say, which camp do you feel like you're in? If you're in the latter, let's get into the former. Be in the camp that's executing well, because you'll feel much better.
I mean, I find that like it kind of speaks for itself, right? Like, execution and performance doesn't really need to be explained. Like, I was at a board meeting last Monday, and a company that didn't exist last year did, for the second half of the year, did 34 million of sales. And like, and it's kind of like, here's what we did. And it's just silence in the room. Like, wow. Like, literally, like,
when
people
you see
just
it.
like standing up, clapping.
Yeah. But I think
everything
there's,
else is just like explained away.
but
It's
I
like,
do
oh,
think
well, this didn't go our way.
when people can easily raise up rounds and the market's hot, it hides a lot of lack of execution.
100%.
And so I think what you're seeing in the first half of this year is the bloom coming off the rose on a lot of lack of execution, because people are figuring out it's harder to raise capital because their public comps have come down 50 to 60%. And so, but you know, for companies that we just announced some additional capital for Electric.ai, a company that's executing incredibly well based in New York. And Ryan has people who are throwing money at him, right? Because he's executing well. And so I think it's just, we're just going to go through this really interesting cycle where the winners are going to get stronger, and the companies that are struggling, it's going to be hard. And so.
And what I tell the companies that, and typically, like, I mean, we've only been investing for 2 years out of our funds. So we have 2 funds, you know, we're on our second fund. I mean, COVID, we kind of deployed tons of capital. First 60 deals were off our own balance sheet. And so we put our money in with another family's money into Velvet Sea and raised from, you know, friends and family and, you know, some big piles of money. And so most of our companies just too early, right? We've been doing it for 2 years, and we do very early stage. We do some later stage stuff. Very active in Web3, which is brand new, obviously. So there's,
I want to get into that because I know you're passionate there as well.
Yeah. And so what I'm telling all founders, most of them are like too early to tell, like, you're not crushing it from a revenue standpoint, but we kind of like what's going on, or you like what's going on, and is just like spend it like it's your last dollar. Like really just focus in on like, what is the stuff that's critical, and cut out the rest. Because when you need money, you may need another million to get where you need to go. You've already spent it. So you can't go back in time. So like when you have money, which most of our companies do because we're so young, spend it wisely, because you don't know where we're going to be in 2 years from now.
Well, let's talk about that. Let's talk about some of the things you're bullish on. I know you're super bullish on Web3. Talk about how you got into it and why, and where you see the opportunities.
Yes. So, you know, Web3 is this broad term, which basically, as we all know, includes like blockchain and decentralized finance and cryptocurrencies and NFTs. We have carved out an area of interest, which is digital ownership. The thesis being there are only about 1 million people who kind of are buying digital items, you know, in the form of NFTs, you know, non-fungible tokens. What does the world look like when there are 100 million or 1 billion people? And I don't know about you, a lot of the younger people in my life, including myself, we value digital stuff. It's digital stuff which brings meaning to our life. So we, as a firm, Velvet Sea Ventures, just had a thesis very early on that it's transformative when, instead of the internet destroying value of intellectual property and digital content, it actually enables you to commercialize it in this always on global market.
That's cool.
Let's really see who are the winners going to be. And so we actually spent time trying to figure out like what areas would work. And we landed on this idea that industries that were transformed for the better because of digital ownership, the leaders in those industries, which there may be many industries going forward, but we were focused on the early industries, would be big businesses. And so the first real big deal we did as a firm, I was buying NFTs for a long time. Not a long time. I mean, in this world, you know, my friend Gary Vaynerchuk called me up and CryptoPunks. Gotta buy CryptoPunks. This is like 2000. I'm like, okay. I mean, he said the same thing about Jordan rookie cards, and I said, I have no interest.
Gary's got pretty good sense of what's coming next.
Yeah, and when he said that, I was like, and then I had to sit down with Cass, and I was Cass and my wife, like, you're gonna hate this. I just spent $20,000 on this stupid picture.
I can see that. Yeah.
She's like, you're the worst person in the history of people. I can't believe you did that. Like, spending it. Now she loves them. But back to Velvet Sea, the first deal was Super Rare. Super Rare had invented this concept of, it's a It's Sotheby's for digital art.
Mm-hmm.
Very high end, working artists. They're all whitelisted. So you have to be a real artist. When I say real, meaning like you work for a living creating art. Now you could be a woman in Brazil who's 18, who's like working every day, or you could be Shepard Fairey who's over my shoulder. But it's working artists. And what they invented, which was so powerful to me, was the idea of artist royalties, that every time your piece was resold, you got 10%. And so you talk to these artists who are like, this is amazing. I have an annuity for the rest of my life. Every time it sells, I get 10%. Then they did collector royalties. The first person to own a piece would be cut into future sales as well. And I'm like, oh yeah, that's what is going to undermine like this basic duopoly, right? Like Sotheby's, Christie's, they're not great companies. Like leaders have gone to jails for collusion. They charge, no one likes
price
paying
fixing
12%. I'm going to pay 12% extra to these like white dudes, basically, just because like they own this real estate on Fifth Avenue or in London or in Hong Kong. And I think it's an awful business model that the internet should attack and hasn't. Like you look at all the middle people in the world, somehow the art industry survived, like travel agents, brokers, like, insurance brokers, stockbrokers, any middleman business. But somehow these like big, like, and I don't want to go down that
same
path,
for music, right? Music is the other category where it's remained a very legacy business model.
Still, yeah. And so, and it's happening in music NFTs as well. And so we did that, and we're like, yeah, that's important. And we did a bunch of stuff in the picks and shovels space that would like support these companies. And then we led the Series A. So we led the Series A for Super Rare, led the Series A for Autograph.io, which is Tom Brady's NFT company. And that was just
I've heard of him.
Yeah, and that was just like, wait, so you have like IP from 20 of the greatest like icons exclusively, and you're going to recreate the relationship with fans through digital ownership. And if you talk to any icon, they talk about how like they have lawyers who police this stuff. Like, is that the real signature? Was that actually the game ball? Like, when everything's on the blockchain and provenance is clear, that whole industry changes. And so that's a company that is, I'm super bullish on. Andreessen led around earlier this year, which it's a superstar team of people around the table there, and and then just helped one of the top 10 projects, Pixel Vault, which is very exciting, reimagination of media. So decentralized Disney, so to speak. They started with comic books. First 8 months, sold hundreds of millions of dollars worth of comics, huge resale business, really deep community. And really what all these companies are creating is a community. Like the product is a community. The medium happens to be NFTs and, Twitter and Discord and all this stuff.
Yeah.
But they become really tight communities that share interests and identity. And as kind of a journalism major who's also an artist and like a hobbyist, that is not like real, and loving finance, I just have, like a lot of your listeners, went down a rabbit hole, and I'm just really fortunate to be able to spend a part of my day in that space. But we're not a crypto firm.
No, but I love the thread that all of those companies are helping to create a market, drive revenue for the creators. I think there's a perception in the, particularly in DC and Capitol Hill and government, that this phenomenon is a negative, and it really, like what you're describing, is a net benefit to society. It's a net benefit to the consumer. It's a net benefit to the creators. It's going to actually create new revenue models and just take it away from entities that really shouldn't be commanding the fees they're commanding.
We started with digital ownership. We had a lot of different areas we could have gone into, but it's the one area that we think is safe, So regulatory environment is unclear. We hope in the next year it'll be cleared up.
Yeah.
But because of digital goods in video games, and the fact that most stuff we're doing is it's one of one, NFTs, non-fungible tokens. We also are involved with some cryptocurrency. Super Rare has since decentralized, and there's the Rare token, RARE. That's the governance token. So that's a token that lets you vote on, what's going on in the network. But it just was comfortable to us. It felt like it was important. And a lot of us who built Web 2.0, like Gary and Kevin Rose and Alexis Ohanian, and people who just built businesses there, we feel a little, the internet and social media didn't end the way we'd hoped. Let's just say that.
Yeah.
And it's been destructive not only to our kids' mental health, but democracy, truth, name it. And it hasn't been great. It's not easy being a 14-year-old girl today, dealing with this imagery and kind of the FOMO, and brands are in your face. Maybe it's just New York City, but I think it's
no, it's everywhere. I've got 3 daughters. Trust me, it's everywhere.
Yeah. And so this idea where there's a better business model that's kind of feels like it was built for the internet and this decentralized network of the internet, and it's not kind of advertising and kind of mining data and weaponizing it and using it against you. And I like business models that are direct. I created this, I'm going to sell it to you. I give you money or value, you give me that, done, right? I think we got away from that, where it was oh, we're going to do this, 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 and this, and that's going to let us open up credit card accounts for 14-year-olds,
right? And all the benefits going to go to one entity. I agree with that.
We're doing what to do what? I had so many businesses that are oh, we're just going to provide financial service to the unbanked, and it'll work out great,
and give them high volatile credit. Yeah.
And it's not that it's bad. Technology is not good or bad, but we have a way of using it for bad more than good. And people who want to do bad are much better at using the technology than people who want to do good. If you go to nonprofits, they're good people, right? Cambridge Analytica happened to be incredible at using this data to do bad shit.
Yeah.
Right. And so that's the problem with technology, is it's not easy to just set it in motion. Hoping it turns out okay hasn't worked out for humanity.
I love the idea, and I think people will love the idea that this next phase could be a positive one and an inspiring one, because I think I don't go on Facebook anymore. I just couldn't go anymore. It just was so painful to me what happened in the Trump administration and news and the elections.
I'm off of Facebook, and I'm
I can't do it. Yeah. Hey, with the time left, we got about 5 minutes. Talk a little bit about, I've always really admired the way you and Cass, your relationship, but also the way you balance work and family and travel. And where did that Zen mindset come from? And I'm sure a lot of times it doesn't feel like a Zen mindset, but it does from the outside. How did you think about that when you were a founder, and how do you think about it today? And what advice would you have for people who are maybe earlier in their career, in their 30s and 40s, and are trying to, one of the things that's so crazy about our world is oftentimes the peak moment as a founder is in your mid 30s, and you're also trying to get married, have a family, buy a house, deal with a lot of stress. And I've always really admired the way you've seemed to handle all that. Can you talk a little about that?
Yeah, I mean, we didn't. None of this is planned. Unfortunately, we live in a world that there is no arranged marriage. It would have been, for those of us who weren't great at dating, it would have been easier. Just before Tinder and stuff, you'd have to walk up someday, hey, I'm Mike, and I'm cross-eyed, it's that hard. I'm nah, it just wasn't good. And so I met Cass. Really met her at a wedding, and we just hit it off because she was working in the internet and I was doing eWire Student Advantage, and she was living in DC. I was in Chicago. I flew in the following weekend for a date, which lasted the whole weekend. And she flew to Chicago, and we're it just happened. She moved to Chicago, and then she got the idea for golf.com. I'm like, I got this other business, but I'll help you. And so I'm working in another business. She started golf.com. We got the first taste of working together. And, you know, those who know Cass, I tried to get her for this, and she's like, no way. Like, I'm not getting on. I'm not like getting on.
Maybe I'll see if she'll do a separate one with me.
Yeah, do a separate one.
Yeah,
but like,
that'd be cool.
Those who know Cass know that she's like no bullshit. Like she's an operator, very direct. She's compassionate. She's kind of a like, she understands emotions and feelings, which like guys don't. And so she's like a really good leader. And so I'm like, I want to work with her. But even before, like I kind of knew we were going to get married, but we weren't married. We started working together at golf.com, which go try to raise money with like your girlfriend. People are like, I remember.
Well, it's funny though. Now there's so many great examples of that, like Canva, and I mean, there are a lot. When you guys were doing it 10 years ago, there weren't. In fact, it was kind of a taboo thing in the venture world. But now there's some good success stories. So
yeah, I was like, you know, my examples are like 1891. Like, there's nothing good. Like, but really, it felt right, and we just kept doing it. And I think the key to and we've now done like businesses together. We're equal partners in the venture firm. Like truly, have a shared life. She does more with the kids and like others because she's like really good at that. I sometimes am not. And so we know our strengths, we know our weaknesses. I know Cass has always known hers, but she tells me mine all the time because I sometimes forget. And it's just been a relationship based on like trust and fun and not taking things too seriously. And frankly, we've had a lot of success. Like, I think if that helps. Yeah, I mean, we sold these companies. We like made more money than I thought I ever would. Like, I didn't grow up with like this like kind of money around me. And it's kind of fun, right? Like she knows why I'm traveling, or I know why she's traveling to a meeting. Like next week is pretty interesting because like I'm going to Texas and California for board meetings. Well, one is like an offsite for a company that we're helping out, one of our core portfolio companies. Others a board meeting. She has an offsite that she's helping to run with another company in New York, and so like we kind of have this shared life and flow that is just an important part of our relationship. But it's not the only part because we have like 3 kids and 3 dogs and interests and like, and so it's hard. The only reason we've gotten it right is because we work together, but we don't work together. Like she focuses on like operations and HR and how do you create incredible organizations. I focus much more on like anything that touches money, like fundraising, sales, building sales team, product development. And so you saw us at Buddy Media where like
you guys had that. I remember board meetings where people would ask some question about operations. You'd say, hey, ask Cass. Yeah. She owns all that you're asking about. And you guys had a very clear delineation of who owned what.
We had
a decade ago.
7 countries. And like I was like, I was selling, I was like with customers, I was raising money. I was like, and if she weren't there, like focus on the home base, making sure employees are happy and healthy and they saw a career path ahead of them and they knew what we were doing. And our board meetings became like, or all team meetings became board meetings. We presented kind of financials to the company, the whole company. We would treat it like you guys are our board and we don't want this stuff. We were kind of high profile company way back when. It's hard for these youngsters to believe, but we were a long time ago.
Very true. I mean, you guys were
we were big.
Yeah, very big, especially in New York, which hadn't had a lot of enterprise software success.
No, and like we always had like, all the press around us and everything. And so we would like share all the numbers, like finances and like revenues, and it wasn't all good. Like it was like, oh, we fucked up this quarter. Like we missed everything. And they'd never leaked. which was so cool. Like
Yeah.
there was this trust that she had built within the company, which was like, and she always said like great culture starts with like cult, right? Like that word cult is like what you as a founder. Now there can be cults for like bad stuff, but I'm talking about good stuff.
Yeah. Yeah.
Like, we're not like doing weird shit, but like cults where people are like, it's like a family, right? Like we got each other's back. There's a shared ethical framework. We're here, we're in it together. And she's incredible at that. Like if I were running the company, we would have retained 0 employees. I guarantee you.
Well, I will say, and you mentioned earlier, one of the things that I always loved about Buddy Media is, I mean, you look at the alumni network and what that group has gone on to do. You guys were always very proud of people when somebody did leave and went on to do something else, very proud of that, and try to be, I think it's a great hallmark when companies have the confidence to say, hey, we helped somebody become a great sales rep and they just got a great opportunity to be a VP of sales, and we're happy for them. We're proud of them. We're excited for them. I think that's a hallmark of great companies.
Yeah. I mean, listen, like I seemed excited. I was pissed. Like when you lose good people, it's like, man, but I think we've always played the long game. And I saw that up front with Mark Benioff, and being able to work with him when it was a much smaller company, Salesforce. I remember asking you, I'm like, should we hold this stock? Oh, you're fine with Salesforce. Like it wasn't
amazing
for that company. I don't know if you remember that
Oh
conversation.
yeah. The talent level there.
You're like, just keep your stock. I'm like, okay.
Yeah.
That's what Jeff says.
It's funny. I tweeted out the other day. I actually looked it up. I've owned Salesforce since 2005. My cost basis is $3. It's at 210. But that's life, right? Just bet on these great leaders and let them do their thing for a decade.
And he does like what's so amazing about Mark is he just does the right thing.
Mm-hmm.
Like it's not about contracts and non-compete, and like it's about like where are you in your life. Like we were having some issues with one of our sons, and I went to Mark. I was like, I haven't really told this story, but like one of us needs to get home after all this craziness. And we had like a lot of stock, and Cass would have lost a lot. Like I wasn't leaving because I didn't want to. I'm like, oh, well, more kids, whatever. But we need to get Cass home. And Mark was like, I get it. Like, we'll do whatever it takes to take care of her.
Yeah. Amazing.
Taking care of her is taking care of you. And it's like, do the right thing gets you so far in life. Like, who cares what the contract says? What is the right thing? And it's not always the right thing for the employee. I'm not saying just give them what they want, but if you can do the right thing most of the time for employees, like going over and beyond, you're going to get that back in spades. And for me, it's been like co-investing with them and like mentoring young people at Salesforce, and really staying connected. Some of those deals that I mentioned, Mark has participated in that I've brought to him. So it's like relationships cannot be transactional. They just have to be human. And that's kind of what I've learned more from Cass and Mark and some Salesforce people than doesn't come naturally to me. I just want to sell shit.
Well, I want to end on that.
More. I got nothing to sell. But.
No, it's such a great quote and such a great life lesson, right? Do the right thing and everything works out. Yeah. And I think that's particularly true in Silicon Valley and technology, where there's this pay it forward. It's not a zero sum game. You and I and others have learned that over the years, if you help other people out, it really pays off in the long run. There's so many great people I've met along the way that have gone on to do amazing things, and everybody has that mentality. I think it's the right mentality, and I hope we maintain that mentality as we go through some choppy waters, and companies do the right thing by their employees, and because we're gonna, when times get tough, it shows people's true colors. I think this is going to be interesting the next 6-12 months.
Yeah, amen. Well, I hope it works out for everyone who at least listens to you. The fact they're listening to this means they've step up, I think. And thank you. And please call Cass. I look forward to that episode.
That'll be a good one. All right, Mike. Good to see you, man.
Okay, talk later.
Thanks. Take care.